Hi, this is Ron Janish with AndrewsCourse.com. If you don't know about us, we teach the Andrews Advanced course, and what we do is we use Andrews techniques in order to forecast the market and know when to buy, when to sell. It's based on geometry, which is really kind of neat because it's been around for a long time, and it made Alan Andrews a heck of a lot of money and a lot of other people a lot of money. And if you'd like to join us, we're available at andrewscourse.com. Now, moving on to what this webinar is about, we're gonna go over to whoops here. Here we go. Okay, first question is which is your style? And this is an interesting question. And what you'll find at the end of the seminar is of this little webinar here is that by being a little bit more flexible, you can really increase your power. Okay. Most people will use one of these three styles, and what I find is that I use these in combination. I'll kind of show you. First of all, there's the pullback style. So prices might zoom past the ML, or they might go all the way up to the far H, and then retrace back like they did here. And then some people will get long, and that's the pullback style. Okay. There's the breakout style, and so you have the market going down in a direction, and down here, like here, you have down in a direction, and all of a sudden they break out of this area here and start really moving up, and so people put their orders in. As you can see in these particular situations, that's exactly what happened. You just had a lot of people going long at once. Okay, now in this particular case you also had an ATRI, Andrews Trend Reversal Indicator, in this area here, and the same with here. So let's see. Let's take a look at some other styles. Here's an interesting one. This one is what we call breakout style versus pullback. Because the next, yeah. See here, for example, here you have an Andrews entry. This is in the S&P. Absolutely classic. And you also happen to have what is well known under Gann theory as a reverse head and shoulders. So you can see this is kind of like somebody's shoulder, and here's another shoulder, and here's a head. And the theory under Gann is simply that way. After prices break through what's considered the neckline, is they'll then go up to this area up in here or beyond. Okay, and that's cool. And what happens is you'd get a typical, using a good pullback style, specifically the last chapter of the manual, that in the Advanced Andrews Course Manual, you'll see you could look at here and you could recognize immediately why this is a buy signal. Okay, and so you have other people who go and enter the market over here, and they help push this thing along. It's really nice of them. And there she goes. Okay, so this is a breakout style versus a pullback, and so each has their advantages. Right? The theory is that this one gets you in way after the move is on its way, as you see in this one here and this one here. It's not unusual for people to get bad fills in these kind of wild and crazy situations. Okay, and then there's something called reversal style, and so here you have an OR reversal using there's three kinds of action reaction center lines that Andrews thought were really good, and one of them was the ORE. And so using that, you have a OR reversal over here, and over here you had a median line reversal. So people went up to the median line, and prices went up to the median line and reversed. This was in silver, and so some people, actually it was probably quite a few in this case here, had their sells in right as prices went up here and then just went short. And so you might have your breakout people suddenly get get short as prices go down here, and that really helps propel the prices down for a while. All right. So these are your three different styles. Now, what do you use with Andrews? Well, I'll show you something that I think is really neat. Um, in some cases, I would suggest using the ORE reversal style. Okay? But you don't have to, because with Andrews, what you can do is you can use the indicators in such a way that you're really out to find major pivots. And so you find your major pivots, and then there's something interesting that happens after a major pivot that I'll show you in a minute. And so after you have this major pivot, you can then look for an entry. And what'll happen is you'll often have your reversal indicators from Andrews at these major pivots. Okay, here's a major pivot, here's a major pivot. These are all daily bars. So so what happens is you can then use pullback style in order to enter the market. And if you want a review of that, just take a look at the last two chapters in the manual. Okay. Give you some really interesting ideas for that. So, and ways of exactly what I'm talking about here. Um, but let's take a look at how useful this really is, and what sometimes you need to do. Okay, these are stocks, a lot of which I'm short. And what we're just going to do is just going to take a look at these, and we can say, well, with perfect 20/20 hindsight, this stock here made a high here and then came down and kept going lower, lower, lower. Okay, so what's really kind of neat here is that in nearly all cases, after prices make a major pivot, okay, there's a point at which prices go up for 50 to 80%. Now, sometimes they'll only go up 38 to 40%, but typically you'll get something. You'll get a 2/3 or better pullback. Let's take a look at this, and we're going to look at this for here, 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 and some of them are really kind of neat and kind of hidden. In these two here, it's really kind of neat. They're hidden. So we're going to take a look at that. And you really need to take an extra step sometimes in order to find these pullbacks and really see them. And the extra step is simply go to intraday charts. And so you can see here that down to this low here, prices went up a little bit more than 50%. Okay. Take a look at this. See, this was in this area up here. All right. So you had several days effectively to say, yeah, hey, wow, there was more than likely a major pivot up here. And now I'm going to be using the Andrews techniques in order to enter the market. And what's really neat is that if you go in the last two chapters of the manual, it'll typically help you find out where this 50, 60, 70% point is going to be, approximately. Let's take a look at this in SUSS. This one was just absolutely, incredible. It made this high here at 77, then went back to 70, which, as you know, is going to wind up being probably close to a 90% or so correction. And I'm not even going to draw the lines in here, but you had your major pivot up here, and that worked out nicely. Okay. And CEO was just an absolute beautiful one. Nice major pivot up here, and then we had a nice comeback, and it takes 1-2 days, and you really need to watch the open on these kind of things. When you have your major pivot, your pullbacks your better entry point or times are often at the opening, and but in some cases they'll give you a second chance, like over here, because this here was probably 70% pullback, and this was probably a 70% pullback too. Note it, but it would have been from here to here is how it went, and then back up, right? That's your area that you're looking at, and let's take a look at the ones more intricate and harder to find. Now, none of these are even a pivot to the upside, but if you look at it closely with intraday data, say you'd see something different, and so you see that prices really, well, let's see if we can knock this down even more. There we go. You see that prices made a 78 or 75% pullback up here. It was in the 70% range. Okay, and see, that's why it's really important that you go down to your lower time frame data, because even though, I mean, it did this and it went down to here, and then a day or so later there it is, right? And so you have this incredible pullback of 70%, which is not necessarily easily visible on a daily chart, right? Now here's another one. This one was a 38 percenter, and these are kind of rare, but they do happen. So you get this thing up here that says, hey, yeah, I'm a reversal of a major pivot, and so then watch for your entry point once they hit 35% and beyond. It's usually between 35 and 70% is your correction. It sometimes goes above to 80 or so. Let's take a look. Okay, see, this one here went a little bit above 35%. It did it here and then did it again over here. All right. So, let's see, NCT. See what this one did. Oh, this one did a halfway back, 50% pullback. So, let's see what it looks like on a daily basis. Okay, it doesn't even look like it did any kind of a decent correction unless you look at it from the intraday basis, right? But, as you know, using the course methods, you wound up determining that the extreme in this case here, the high, was a major pivot. And so even after that, you still had several days between the extreme and the entry point. Now, what Andrews used to do is he'd say, well, after you find this to be a major pivot and you have this down day here, this lower close, once you have this here, you can draw your mini median lines. And true, that is another way to enter the market. That would be the standard textbook way. Okay, use your mini median lines, and we go over those also in the course. So how you do it is up to you, but do really consider the idea that after you determine that something's a major pivot, like up here, that rather than risk this not being a major pivot, you're using a mini median line for an entry, or waiting for a pullback that's somewhere between your 35 and 90%. And most of the time it's 35 to 65. Okay? Anyway, I thank you for your time, and come take the course if you haven't. If you have, we'll see you in the other videos. But if you haven't, come take the course. We're over at andrewscourse.com. You just go on to there and you click on products, and something happens, hopefully. That's what happens when you do this on the fly. There we go. And all you do is click on Buy Now, and you have it. And this tells you all the kind of different things that are in the course. All right. Thank you for your time, and see you next time.